Good morning, it's Harvey Jackson. Just going to go through some of the USDA numbers that came out yesterday. It was kind of a bit of a yawner, but it did have some positive numbers for wheat, but we'll get into that. Today's April 1st, or what some people call April Fools, but Liberation Day, which is the key new term that Donald Trump uh, labeled for the retaliatory, the reciprocal tariffs that he's going to put on, and tomorrow on all countries. And I think it's going to be the new R&R, but there's no relaxing with it. It's going to be reciprocal and retaliation. So on this slide here, we do see exactly what some countries actually already have on for tariffs, and this is information that came from the World Trade Organization. And what I want to point out here is India has like 17% tariffs on all goods that they have tariffs on, as a average percent, and then all stuff that they do export, uh, weighted is 12%. So obviously there's enough goods that don't have tariffs on, and that brings down your simple versus the weighted average trade tariffs. So you can see Canada sits at 3.8% simple average of the stuff that we have tariffs on, and then all the stuff that we sell brings it down to 3.4. U.S. is maybe the country that it's actually got the least amount of tariffs. They do have tariffs at 3.3 and weighted only at 2.2. So they are the least probably on both kind of fronts. But we'll just see how he impacts some of these countries that have a lot of tariffs. You look at South Korea has a lot of tariffs. Mexico's got a fair bit of tariffs compared to even us and the U.S. Like if you're looking at who's the most friendly to the U.S., it would actually you would have to suggest that it's Canada anyway. But that's not the way he's treating us anyway. So U.S. farms this spring intended to plant the largest corn area since uh, 2013. So way back here, when you look at the actual percentage, and that's well expected, I think. Came in slightly above what they expected at just over 95 million acres, and there's a bit of a deeper dive where those are on the soybean side. It came in just maybe slightly lower than the trade average, but at 83 and a half. And here's the country or the areas that are decreasing. And here you can just see the shift. Cotton is probably the biggest decrease, and a little bit of a surprise was the spring wheat is actually going to decrease a fair bit. But they basically went into corn, and I talked about that yesterday a bit too. So corn increased, sorghum increased, and then your wheats and a lot of these other crops that Karen Braun showed here is decreasing. So you can see that the decreases are probably centered in even North Dakota and in Montana, and those are the basic states that the spring wheat is planted, and the decrease is going to be a little bit more than expected. Here's your corn planted area. A lot more corn in in the south, of course, but you still increased corn pretty much every state. Soybean, uh, most of the states are decreasing, so red. Uh, and this is maybe a little bit of a surprise. The corn was rising ahead of the tariff announcement, and oil actually took a pretty good run, and I think that might have been some of the Trump being a little bit pissed off, but there's also the retaliation tariffs that are coming on, and it's maybe taking a little bit of a pause there. So if we look at canola, it's both sides of unchanged really. Rapeseed is down a fair bit today. Soybean oil is still trading up. It's like a third of a penny up. Palm oil is up, and your crude oil is just slightly up. And then all your wheats are basically most of your wheats are basically trading up to slightly down. Corn's up 2.75 cents, and the Canadian dollar is basically flat. So just deeper dive. This is your front month May contract. This is the profit so far. If we got into those positions as we talked, and there's an exit strategy up here, so we're halfway there already. If anybody wants, we should be moving those stop losses up if we have this position on. Just to not to, and the same thing with this is the July, so you may want to move those stop losses up so that you don't lose in case there's a big move on this retaliation tariff or the new R&R, as I maybe keyed it here. This is new crop and lots of green days. You're going to probably have to have a pause. The markets don't all stay green for forever either. You need pauses in there. You can see that it happened even on the leg up, but this is a lot steeper run up here, getting ahead of spring. So this is the forward curve on canola, and when you talk about forward curve, it's just the futures months and what the prices are. You can see that July and November are almost equal in price, but you can see here, this is where there was basically an inversion, and now that inversion's come out, and we're basically trading with the November trading higher than May with a pretty decent price, but it was flipped over until, let's call it, February. So here's rapeseed. It's $182. Differential is still pretty high. This is my longer term trend line, but if we're looking at where it could go down to, and the hope would be that canola increases in value against the European rapeseed, and we gain $82 more on the Canadian canola price. That would be the way I would like to see it, but it's not the way the market will do it. That's for sure. Uh, so here's your 511 euros per ton, and the new crop is 480 euros per ton on their new crop pricing. Um, I just want to point out here again the marine traffic. There's quite a few uh, um, vessels pulling grain from the Thunder Bay already. So, and I have tracked a couple, but they've we'll see if it's going to be showing up on the export data here soon. It's got to go from here, go into the mouth of the St. Lawrence at Cyril or Baie-Comeau or somewhere over there, and then get unloaded and loaded onto the bigger ships. Now, what are they loading? We'll only find that out later as well. I don't have any insight on that myself. So if we're looking at soybean oil, nice recovery that we've seen from these trading sideways to lower there for quite some time, uh, which is good. Palm oil, it looks like it gapped even, but still a little ways to make higher highs to get to those values. Crude oil had that big leg yesterday, and a bit of a pause here at the 38.2, or this, yeah, retracement value, and we'll see if it's going to rally through there. Soybeans, basically sideways to doing nothing in this channel now, uh, and just a longer term look on the daily, and it's still closer to the bottom than you might think here. Here's your meal. Your Canadian dollar basically trading inside this range. So what I could do is just measure this range, because you take these outliers out of that range, and it's basically just trading between 72 and a quarter down to 68 and change there as well. Wheat, nice recovery yesterday with a little less than expected planted acres, so bounce off of the bottom that we kind of created, a double bottom. So hopefully we can continue this increase here. New crop, still looking for targets, probably to get back up into that area. Hard red winter, it 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 had their green days as well, following all the other wheat complexes. So here we are. Corn, um, it surprisingly stayed positive yesterday with the just slightly bigger than expected acres, but it's still tight overall world supplies. We'll find out next week what that really means. Here's your live cattle. So we basically made a double top here, still making higher highs though when you look at it, but it could be taking a break here from trying to go higher here. And I was, teasing a couple of the cattle growers that I ran into the last few days. I was just talking about gold is the blue, and here's your cattle market on a weekly chart. You go, huh, yeah, they're pretty similar. Anyway, next report that we're looking forward to is Liberation Day tomorrow, but the next actual statistical report is going to come from the USDA with their crop production and S&D next week.